I'm James Sykes, CEO of Metal Energy. We're a nickel exploration with assets in Ontario and Manitoba. Our flagship property, the Manibridge project, is a past-producing high-grade nickel mine with a lot of nickel left in the ground there. And so we're trying to explore it and prove that this can be a mine of the future. Now over to your host, Mr. Matthew Gordon.
Oh, that's good. Oh my goodness. Thank you very
Practice.
much. Hey, well, good to see you, James. I haven't seen you since January, and I know we'll see you again in November. Perhaps catch up on Baseload, one of the other ore grip companies. Look, when we spoke, it was early days. You just listed in at the end of last year, focused on Manibridge and also Strange. So I kind of like to kick off with the Strange project because I think you were going to look at a couple of holes there.
Yeah, so Strange, we did complete one drill hole. We were supposed to do two, and it was a little bit difficult with the way things worked out. It took us 6 weeks to drill 700 meters, so there were a lot of issues, and we just felt that going after the second hole at this time would have not been the best use of shareholder funds. So with the one drill hole that we did complete, though, we found the results to be very interesting. We found the right rock types, which is what we were looking for, with mafic bodies intruding into the sediments, so they do exist. However, as far as any fertility involved, we didn't see much in the way of nickel mineralization within the mafic units or the sediments. So we're going to be looking at drill hole 2 in the future, probably next year, because it is the better target. Just logistically, we started out with the one that was closest to the road, the idea to move into the second drill hole. So next year we'll target the strongest magnetic anomaly on that project.
Okay, no pregnant rock. Okay, well let's go back to Manibridge, which seems to be effectively the flagship project here, ex Falconbridge asset. So you announced the 10,000 meter drill program. You raised some money at the beginning of the year. What's happening?
So exactly. We wanted to complete 10,000 meters, and then the market just really crashed out globally across the board. So we got about 5,200 meters complete, and that was by the end of July, and we just decided to be cash conservative. We had spent all of our flow-through commitment, so we figured that we wouldn't have any penalties coming up, and it was a wise and prudent move to retain as much of our capital, because we don't know how long this whole market scenario is gonna last for. I see a lot of other nickel companies, and nobody's getting any joy for nickel results. So to raise money at lower share prices just really isn't something that we want to do. So if there is a way to have to see these share prices go up and just do a raise at higher levels, then that'd be great. So we've got the time to do that.
Yeah, no, right. And look, I was speaking to a CEO of it's actually a gold company this morning, pretty much taking the same attitude to this. They said, put out a PFS, market didn't care. In fact, anything, stock went down. Off a good PFS, it must be said. So they've said, well, we are downing tools, and we're just going to focus on desktop for now. So nothing wrong with that. Just want to understand that the sort of mentality. So with the 5,200 that you did do, what were you seeing?
Nickel everywhere you look. It's a great system. This is one of the reasons why we went after this project right away, and why we're so ambitious and bullish on it. Everywhere you look along this trend, it's just nickel, nickel, nickel. We use a 0.3% nickel cutoff, and it's always there. So we're seeing sulfides, we're seeing nickel, we're seeing copper, we're seeing cobalt even PGEs, which were never assayed for before. So there's a lot of different styles of mineralization. Well, I guess the typical nickel, cobalt, copper styles that you would find, they're all there, and it continuously along this kilometer trend. Now we're trying to pinpoint where we're going to find these, what I would like to call pearls on a string. It was what was mined in the past. When they mined 1.3 million tons at 2.5% nickel with some copper byproduct. We do believe that was just one piece of the entire pie that is there. And so with some of the drill holes that we had from this winter, we had 30 odd meters at 1% basically. That's a pretty successful and quite ripe area for mineralization. So we're trying to follow up in that area, because there are historic drill holes which had very similar results, 40 meters at 1%. So we know that is a little bit more fertile. We know that there is great mineralization within that area, and that's one of these pearls on the string that we really want to develop and see how large see how large it can go, but also where can we find more of these?
Right. So 5,200 meters. Are all those assays out? Have we seen everything?
Not a single one. No. We're seeing the lab. So the lab does, I guess, they provide us with information in 3 different parts. The third part being the actual assays coming back. Typically, I would say within 30 days is when you get step 2. And we've seen a lot of step 2s come in. So theoretically, within the next 2 to 4 weeks is when we should start seeing some assay results come out. And we're expecting some good results.
Right, but will that be everything all at once? I mean, are you batching these things? I mean, how are you releasing
They're
them?
unbatched.
Right. Okay.
No, they will be batched for sure.
Okay. And when would the entirety of that drilling be out?
I would say around that 4 to 6 weeks feels appropriate.
Okay.
And some of our later holes that we drilled between holes 20 and 25, there were some interesting results coming out of the XRF. So we're looking at some. Yeah, we're very excited to see what we'll get.
Okay, right. So it's high grade. You're finding. Well, you're excited about what you're seeing there, but you've got to kind of rein things back because the markets, and you'd be burning through cash, and raising capital, I guess, would be expensive in the current environment. Not just for nickel, I think we're seeing it across the board. Are there any kind of, because you're going through the process of acquiring the Manibridge project, right? You know, you start. I think you started with 49. You're up to 70 now, and you want to get to 100%. In terms of, if you slow things down, does that affect your ability to acquire this? Or are there any kind of get out of jail clauses for them?
Not entirely, because we've completed every stage, and all of the cash requirements, all the share requirements have been issued to Canalaska. The one thing that we're lacking to reach that 100% is a total of $4 million of exploration expenditures. We've completed about $3 million this year, so we've only got $1 million of exploration left. Completing a 10,000 meter program, so I guess the remaining 4,800 meters would definitely get us over that obstacle, and then give us 100% Manibridge.
But do you need to do that? So you need to do that within, the $4 million needs to be spent within what time frame though?
Within 12 months at least. I think I do believe it's actually longer than that, but we're confident we're going to have that done within the next 6 months at least.
Okay. So no. Okay. So that's fine. And then with regards to where you go from here, because obviously, okay, we're going to rein in the spend at the moment. When do you kind of assess the market? Is it like a monthly board meeting? Is it a quarterly session? Is it going to wait till the end of the year? I mean, how do you make decisions?
Yeah, more of a quarterly type of basis. Things can change so rapidly on a week-to-week, month-to-month basis that we do assess on the quarterly scenario. But trying to get this drill program done and looking at future raises, well, that is more the month-to-month type of scenario. Which, how far we're permitted to drill 100,000 meters. And we have that permit for over 3 years. Now, we applied for that amount because we wanted to drill that amount. So the more that we do delay our drilling, the more that we will have to do over a shorter period of time. So there's kind of that urgency in a sense to really continue to make our moves and steps forward on more of a tighter time frame than on a quarterly scenario. But again, we're up against the market. I feel like our back's against the wall in this type of scenario. But we do believe that this is going to be big. We do believe there's a lot going on. So we'll assess as necessary.
Okay, and so I mean, obviously, like your share price has been battered like everyone else's here, with like I think 17 cents at the beginning of the year, 7 cents now. And not a lot of interest shown by retail more broadly. Yet industry, if you're looking at certainly EVs, they are investing hundreds of billions of dollars into getting their infrastructure geared up for this. There's a sort of disconnect between sort of equities markets and what the industry is doing. I guess that's slightly slightly frustrating. So what's your message to retail?
Invest, get behind what is booming. And electric vehicles are booming. Renewable energies, which require batteries, are booming. This is definitely a path forward, and it's not going anywhere. This is the way of the future. There's, you're looking at a lot of these electric vehicle plants going up that are costing billions and billions of dollars. More and more people are buying electric vehicles. I did a road trip across Canada this summer, and it was, I was honestly shocked at the amount of Teslas that you can see on the road. Yeah, definitely blew me away. I didn't think there'd be that many in Canada, but there are. So this is the reality. This is the route that we are going, and without having the resources to help these burgeoning industries move forward, where they're going to run stagnant. And then, it's not just the OEMs in the end who lose out if they can't get the resources, because you've got investors in those as well. So it's all part of the big cycle of everything, and everybody needs to do their part. And that's where we want Metal Energy with Manibridge to do our part, is to provide the nickel that's required. And obviously we need investors for that.
Yeah, you do, and the thesis is there. It's kind of obvious, and we're in a sort of down a pressure cycle when it comes to equities at the moment. But hopefully we come out the other side. These cycles do tend to do that. So there's some bargains to be had, folks. But your job, James, is to say to people, well, what is it that you see here? It's early days for you guys. You've just started, end of last year. You're seeing good results so far, but you're not going to spend the money to kind of keep that sort of going, because you're not getting the reaction in the market. But what's the big picture here for you guys? What is it that you see that perhaps the market needs to understand, or you will hopefully help them understand?
We're going to see how the results come out. We're going to see how the market reacts to results from this summer's drill program. If positive, then good, then that's the easy step forward. If not, then we know it will be a little bit more difficult on the path forward. Which, again, our intention for this project right from day one was to bring this into an operating mine. It is such an easy scenario. The infrastructure is there. It was a past producing mine. The mineralization is still there. There's a lot going on for it. There are new mining techniques that can be applied. There are new processing techniques that can be applied that they didn't have back in the 70s and 80s when this was being mined out. So you can take a lot more of the rock that is there, and I do believe you can make that economic. We're in the right jurisdiction. We're in Manitoba, Canada. We're within the Thompson Nickel Belt. We're 100 kilometers south of Thompson. So again, all of the infrastructure is there. Railway's right there. The road is right there. It's a 5-minute drive to get from the highway to where we're drilling, to where there could be a mine. So this is what we want to do. We really want to put this guy into production. It was basically a no-brainer for all of us to get involved into this because of that.
What did you mean? I didn't want to pick you up on it. What did you mean to say? New techniques, and this could be economic mining, because it's high grade. You're talking about the high grade components of it, but how would you mine this? How do you think that this type of ore body gets mined economically in the future?
So as per that area that I was talking about earlier, where we're seeing 30 meters of 1%, 40 meters of 1%, that is what I would consider to be near surface. So that's within 100 to 150 meters from surface. So is there an open pit potential there? If so, I think that's an easy opportunity. If not, then there is potential for block caving. Block caving seems to be the open pit analogy in the underground scenario. It seems to be one of the most cost effective, especially if you've got bulk tonnage scenario, then block caving works well. On the end of that, then you've got other techniques such as ore sorting. So with the sulfides, which are quite readily distinguishable through XRF scanners and things like that, you could crush your ore and then sort it, and so you're sending less material into the mill in the end of things. So you're saving a lot of costs on the milling side of things.
Okay. Interesting. Okay, well, look, you're getting some more data out soon in the next few weeks. Brilliant. I'll see you in November. Did you say November? Yeah, it is November, isn't it? Yeah. Or was it October?
Nope, November.
November is November. I'll see you in London in November. Okay, we'll hook up then for sure. I'm glad base load's going well. Like I say, it's a good time to be in uranium. I'm at the WNA tomorrow, and we'll hear what everyone's got to say, and hopefully some good news in the marketplace. It feels like Groundhog Day, doesn't it? The last 3 years.
You know what? I think it feels better. I just everything, even with nickel or just the markets having no love, everything is still up within the last 2 years. Everything is still up, and that trend's not going to go anywhere. All prices are good.
But that's a batshit crazy thing here. The metal prices are through the roof. Industries are spending hundreds of billions of dollars getting this shit sorted and trying to nail down supply chains. You've seen so many people, so many of these OEMs like moving back upstream and buying into mines now, lithium mines. You've seen Ford, GM, Tesla, doing this stuff. It's insane because they're just going, not so sure where it's coming. I don't think the metal traders are going to have too many options for us. Or quite frankly, the pricing could get out of control if it's down to metal traders. So yeah, it'd be interesting to see what else and who else they pick up over the next 18 months or so. I think it's going to get
metal
crazy.
Energy. Hey, let's get that out there, people. Come on.
We will, man. Okay, well, good to see you, mate. Good luck with that. I'll see you in London. All right.
All right. Thanks a lot, Matt.